So let's talk about what's been going on in the labor market that you think is important to understand if we're going to try to answer this question for why employment growth, particularly employment growth for less educated, low-skilled men, what's been going on in the labor market over the last 20 years, plus years, whatever you want to focus on that helps us understand that.
Yeah. So I'm more of the belief that there might have been this secular trend, the structural story in the background of this recession. So what is it for me that I've been focusing on? In 2000, there were about 18 million manufacturing jobs in the United States. Okay? By 2004, that number was about 14 million. So in a relatively 4-year period, we lost about 4 million manufacturing jobs.
This is pre-recession.
Pre-recession.
This is actually the earlier, we're not even at the end of the boom yet.
Yeah, not even at the end of the boom yet.
We've got 2000 to 2004, while the economy is generally going up over that period, we're seeing the number of manufacturing jobs fall from 18 million to 14 million.
14 million. And you think to yourself, well, why is that important? Well, for this group that you and I have been talking about, these lower skilled, again, men without a 4-year college degree. About 30% of us roughly have a 4-year college degree. About 70% of us have less than a 4-year college degree. So of that group, historically, about, I would say somewhere around 20 to 25% of them worked in manufacturing. So this is a big sector for this group. And so as those jobs going away, there's been a part of their labor market that has shrunk. Now, normally, when parts of labor market shrunk, something happens. People move to other sectors maybe. People maybe stop working depending upon the wage that they earn relative to, the benefits they get of not working. So that happens. Now, the question that you come back and say, well, why didn't this show up in employment numbers prior to the recession?
Why didn't it just show up as 4 million people, fewer people working?
Exactly. It's perfect. At the same time, there was another important shock that hit these lower skilled men in these prime ages that we've been talking about that might have offset that structural decline, this decline in manufacturing. And as the housing market was really booming during this time period, and construction jobs went through the roof. And for these low-skilled men, the same group we're talking about, historically about 10% of them worked in construction, maybe 11%. That number went up to 15, 16, 17% by 2006. So you got this one trend that might be more permanent. Manufacturing jobs are disappearing from the U.S. economy.
And that wasn't new. That had been going on before this?
It's going on before this. It happened. The magnitudes are actually bigger in the 2000s than the ones we might have lost in the 80s. And the ones we lost in the 80s happened, gradually. Okay, this happened in a relatively short period of time. We could talk about maybe why in a few minutes, why manufacturing contracted so sharply in the 2000s and continued to contract.
Might not be unrelated to the housing boom, but we'll come back to that later.
It might not be, but there are other stories. We'll come back to that later. So the key part of this is that as those jobs went away, a large amount of them went away in the 2000s, you had another shock that ex post was temporary, that construction jobs boomed in the U.S. economy. We were well above long-run trends in how many houses we were building, how many plumbers we were having, how many electricians we were hiring in the economy. And that helped, the word I use, I don't know, I like this word. Sometimes I like it, sometimes I don't, but masked the decline in manufacturing employment.
The decline in those manufacturing jobs, I think we should regard largely as permanent. That was not like, well, some temporary things were going on. We didn't need as many manufacturing jobs, but guess what? Tomorrow we're going to need them again. Yeah. We think that, whether it's China, whether it's whatever forces you want to talk about, even maybe just changes in technology.
Both of those are the ones on the table, exactly.
But whatever it was, those are not coming back.
Exactly.
Now, the construction boom, as you alluded to a moment ago, is more likely to be a temporary phenomenon. Yes. it's not only turned out later to be a temporary phenomenon, it almost by its very nature has to be a temporary phenomenon. You can't keep building houses at the rate we were building them then. So we've gone to 2004 now. This is, the recession's not even
coming yet, exactly.
But you're telling us we should have seen it coming.
Yeah, and I'll tell you how we could have saw it coming, which is easy to say ex post, but maybe how we could have seen ex ante in a second. But I just want to continue the story now, is that you go to 2007, the housing boom collapses, and all those construction
So what
jobs...
about 04 to 07? What happens in that period?
Everything, the housing, keeps going a little, manufacturing stabilizing. So this is what you're saying, the wiggles. So if you look at 00 to 04, employment rates kind of dipped a little bit. 04 to 07, they kind of went up a little. 00 to 07, that's kind of where things were roughly constant during this period.
So 04 to 07, we have not such big trends, but again, not such a big pot, but still relative to we started in 2000. If I go 2000 to 2007, I have a period that wasn't good for manufacturing. It lost a lot early and then maybe leveled out. Construction boomed early and then maybe leveled out. But over the full period, we still have this same story.
Exactly.
Now we are in 2007.
2007, housing boom collapses or busts, or pick your favorite word, goes back to trend, whatever it is. Housing prices collapse, and at that moment, we stop building houses. So you lose 2.5, 3 million construction jobs. You lose another 2.5, 3 million manufacturing jobs. And the labor market opportunities for low-skilled men suddenly are unveiled to be very weak.
But isn't there more than just an unveiling? And let me try to play it out a little bit. That is, one story is we are where we would have been in, say, 2010 had there not been this boom. And what was going on is we masked it for a period of time. But isn't there another side of it, which is the housing boom generated less construction employment after the fact than it would have if the boom hadn't occurred.
Yeah.
That
because we've intertemporally switched from building houses.
We built too many houses
early relative to late. Exactly.
The fact that we built so many during the boom, then we build even fewer than we otherwise would have. So that's actually beyond just masking.
That's on top of it. Exactly.
And that means that conditions for these men are just as bad in manufacturing as they would have been. They're worse because of the boom. So not only did the boom hide what happened, it exacerbated what happened later.
And you can see the story that, the added on of building too many houses and a little bit lower construction, you might think is inherently temporary. In a couple of years, depreciation kicks in, some of those old houses that we built extra of kind of depreciate away, and those construction jobs might come back at some point. There's no evidence that these manufacturing ones are coming back.
Question for you. I mean, we built up a lot of extra housing stock during that period where we built a lot and had a booming construction industry. Has that recovery from the post-crash construction, have we pretty much worked off the excess housing stock that we had? Is that temporary effect that we just talked about kind of worked itself out?
In most markets, you've kind of worked through a big chunk of that extra slack in the housing market, and you're starting to see now housing construction and housing prices perform like they would in what I'll call normal times. That's a hard word. What is it, normal time? But think about that, 97, 98, 99, before the housing boom started.
So now let's go 2000 to today. The housing, let's call it the construction industry, is about where it would have been had we not gone through this boom-bust cycle. So it's not worse than it would have been. It's about where it would have been. But manufacturing is still got that cumulative decline over this full period. And so what you're saying is if I want to understand 2000 to 2015, the ultimate story is about what's been going on in, say, manufacturing or these broader secular trends that you've been talking about.
Yes.